Press the bell icon on the YouTube app and never miss another update.
In this episode, we will discuss the treatment of issue of rights shares at the time of determining the basic EPS. Let's start with the most basic thing. What do we mean by rights shares? See, whenever any company which has already issued equity shares in the past is in need of additional funds, then the Companies Act suggests that such company should first approach its existing shareholders. Now, these existing shareholders may apply for the shares, may not apply for the shares. That is the reason we are calling them as rights. Rights means, as an existing shareholder, I have a right. I may apply for the shares, I may not apply for the shares. So that is what we call as the issue of rights shares. Now, usually it has been observed that a rights shares will be issued at a price which is discounted compared to the market price. When I say discounted, I don't mean discounted to the face value. It is discounted to the current market price. This is done so that the existing shareholders are motivated to apply for the rights shares. For example, let us say there is some company. The market price per share of this company right now is rupees 100. So what this company does is, it comes up with a rights issue, and the subscription price for the rights issue, let us say, is 40 rupees. So if you are an existing shareholder, let us say you want to invest further in this company. If you want to buy further shares of this company, then you will have to spend 100 rupees if you are buying the share on the stock market. But if you apply for the rights, a share which is trading at 100 rupees on the stock exchange, that same share is available only at 40 rupees. It is needless to say that as an existing shareholder, you will be highly motivated to apply for the rights. So this is what the companies normally do so that the rights issue becomes successful. However, our discussion is with reference to basic EPS. Now, please understand the treatment really well. Issue of rights actually has two elements. It has a cash element, it also has a bonus element. So it has a cash element and it also has a bonus element. Let's discuss this. You are not giving a rights share free of cost. You are charging for the rights. In our example, you are charging rupees 40. So this rupees 40 that you are charging, that is nothing but the cash element. So I am charging rupees 40 per share, that's the cash element. What is the bonus element? A share which is trading in the market at 100, you are giving away that share just at 40 rupees. Don't you feel that you are offering your share at a discount? I am not saying you are giving the share free of cost, but you are definitely giving the share at a price which is lower than its fair value. This discount that you are offering to your shareholders is working as the bonus element. So when you say bonus element, the bonus element is discount to the market price per share. So this is the main thing that we are supposed to do when you are calculating the basic EPS. Find out what is the cash portion of rights shares. The cash portion of rights shares will be considered from the date of allotment of shares. We know that once the shares are allotted, they will get included in the weighted average number of equity shares. So that is the reason the cash element will be considered from the date of allotment. This is the bonus element. If it is a bonus element, then we have to consider as if the shares were issued right from the beginning of the earliest reporting period. So the split of the rights shares is critical when you are calculating the basic EPS. Find out the cash element, consider that from the date of allotment. Find out the bonus element and consider it right from the beginning of the earliest reporting period. Let's take some figures and it will become very clear that how exactly the treatment is required to be given. Continuing, yes, with the same illustration, the market price, let's say, is 100, the subscription price is 40. Let us say the number of shares right now is 1 lakh, let's say, okay, and the rights ratio, let us say, is 1:5. That means for every 5 shares held by your shareholder, they can apply for 1 rights shares. If this is what we are doing, then I will get the number of rights issued. So number of rights issued will turn out to be 1 lakh into 1 by 5. So that turns out to be 20,000. So we are going to issue 20,000 rights shares. And per right we are going to charge rupees 40. So that will give us the cash collected. I basically want to work out the cash element and the bonus element. So as we know, now we are going to issue 20,000 rights at a price of 40. So the cash collected is going to be 20,000 shares at 40. So I will collect 8 lakhs of rupees. So 8 lakhs will be collected by us. Once you have done this, we should now find out what will be the post-rights fair value per share. Yes, this is important. Before the rights, the share is trading at 100. A share trading at 100, I am offering at a discount of 40 rupees. You know what will happen? The share which is trading at 100, if you as a company yourself is discounting your own share, then the fair value of the share on the stock market will fall. So I just want to know that post rights, what shall be the fair value? Let's see how that can be done. So what I do is I calculate post rights fair value per share. Right, this FV is not face value, it is the fair value per share. How will I get it? Okay. I have a simple formula for this. It is MN plus cash collected, and this should be divided by revised number of shares. This is what will give me the post rights expected fair value. What is M and N? M is the market price before the rights issue, which in our case is 100. N is the number of shares which are there before the rights issue, which in our example is 1 lakh. So here what I do is I take M, which is 100. N, as I said, is the number of shares, which is 1 lakh. To this I will add the cash collected, which is 8 lakhs. And this I will divide by the revised number of shares. Right? Right now there are 1 lakh shares, and I will issue another 20,000 shares. So 1 lakh plus 20,000, that is going to be the revised number of shares. The logic of the formula is very simple. You are simply calculating what will be the post rights value per share. This M into N is giving you the value of the firm before the rights issue. We know value of the firm is nothing but the market capitalization. Market capitalization means number of shares that a company has issued multiplied by what is its market price right now. So when you do MN, when you do 100 into 1 lakh, you are calculating that before the rights, what is the value of the company. Now it is very natural that the value of the company will increase by the cash that you have collected. Right? After all, the cash collected is an asset. So by that amount, the value of the company will increase. And that's the reason I am adding the cash collected. And this I am dividing by the revised number of shares. Because I want to now know what is the value of the company, not in total basis, but value of the company on per share basis. So that's the reason I will solve this particular equation. Yes, help me out. 100 into 1 lakh. Plus 8 lakhs, that I divide by 1 lakh 20. So I get this as rupees 90. So the post rights fair value per share is turning out to be 90. So what we are trying to say is that although the share is trading at 100, but its actual fair value after the rights issue will turn out to be simply equal to 90 rupees. If you are of the view that I will apply for the share at 40, then the share will come in my demat account and then I will sell at 100. You are wrong. That's not possible. The moment the right shares will be in your demat account, the value of the share on the stock market will fall from 100 to 90. So the benefit that you will get will be not equivalent to 100 minus 40. The benefit that you will get will be equivalent to 90 minus 40. And that is what is going to decide our bonus element. Let's figure out how will we get the bonus element. Now, just ask yourself, what is the total cash that you collected? The total cash that you collected is 8 lakhs. And we know that the post-rights fair value is going to be rupees 90. So we ask ourselves this simple question. If you had issued the shares at the true value of 90, how many shares will be required to be issued to collect 8 lakhs of rupees? I'm again repeating it. You collected 8 lakhs by issuing rights and you issued that at 40. So you collected 8 lakhs of rupees by issuing shares at 40 rupees. Instead of issuing at the rate of 40, if I were to collect rupees 8 lakhs by issuing shares at the true fair value, then how many shares are required to be issued? I will call this as shares issued for full consideration. So I say shares issued for full consideration. So shares issued for full consideration will be, you have collected 8 lakhs at 40 rupees. But what if I had issued shares at the true fair value of 90? So I take 8 lakhs and divide that by 90. I am getting 8889 shares. Right? So to collect 8 lakhs of rupees, you ended up issuing 20,000 shares. You know your number of right shares are 20,000. To collect 8 lakhs, you issued 20,000 shares, but actually that 8 lakhs could have been collected simply by issuing 8889 shares. In other words, the additional shares that you have issued, you are not receiving any consideration for it. These will be considered to be shares without consideration. So I say here, shares without consideration. This will be equal to, you issued 20,000 shares to collect 8 lakhs, but I could have collected 8 lakhs only by issuing 8889 shares. That means 11,111 shares are issued without getting any consideration at all. The moment you say that 11,111 shares are issued without consideration, that means they are bonus shares, isn't it? So these are the bonus shares. And now that is how I'll give the effect of the rights. See, 8889 shares are for full consideration. That means you have received cash. If you receive cash, consider them from the date of allotment. And these are shares without any consideration. That means they are bonus shares. If they are bonus shares, consider as if they have been issued, right from the beginning of the earliest reporting period. This is how now I will determine the weighted average number of equity shares. Just check the way I will do it. The weighted average number of equity shares, right? Let's assume that the year beginning is 1st April 2019. Okay, year beginning is 1st April 2019. So I will say shares at the beginning. Okay, shares at the beginning. Now we know that the number of shares at the beginning was 1 lakh. And we will consider 11,111 shares to be as good as bonus shares. I will have to consider as if the shares were issued from the very beginning. So when you say shares at the beginning, you will say it is 1 lakh plus this bonus element which is 11,111. So I get this as 1,11,111. Since they are there right from the very beginning, they will carry a time weight of 12 by 12. And then the two should be multiplied and I'll get the weighted product. right? Let's assume that these rights shares, they had not given us the exact date, but let's assume that these rights shares were issued on 1st June. So my next date over here will be 1st June 2019. I will say rights for cash, right? There are rights shares which are issued for cash. Here consider the shares which have been issued for full consideration. See, for those shares you have received cash, and when you have received cash, it should be collected from the, it should be considered from the date of allotment. So we are assuming that the date of allotment is 1st June. So this 8889 shares should be considered, right, from 1st June 2019. 1st June 2019 till the year end, it will carry a time weight of 10 by 12. Multiply this 2 and take a total. I'm not interested in this total, but that total will be nothing but the weighted average number of equity shares. So whenever there is a rights issue of shares, you should split it into its cash component and its bonus component. Cash component, in our example, is for 8889 shares. Since you have received cash, since you have received consideration, consider from the date of allotment. There are certain shares which we have simply issued because you have given a discount to your shareholders. So there are certain number of shares for which you have not received any consideration at all. Consider them to be as good as bonus shares. Bonus shares means consider from the very beginning. And that's the reason I will adjust the number of shares at the beginning. Instead of considering 1 lakh shares, I will say it is 1 lakh plus the bonus element, which in our case is turning out to be 1,11,111 shares. Now this is a very logical way of understanding how the workings are required to be carried out. Now, let me show you how the standard considers it. This is a logical way of understanding how the treatment of rights shares is required to be carried out. Now, what does the standard say? Standard has given a shortcut over here. But to understand the shortcut, we have to first understand the detailed calculation. So I have shown you the detailed calculation. But when we will solve questions of basic EPS based on rights, we will not take this approach. A shortcut is given and we will simply understand what that shortcut is. Now, what shall we do in that shortcut? In that shortcut, we will reach till up to ₹90. We will do exactly what we were doing till now and we will reach up to ₹90. Once you get 90, then don't do this calculation. Don't do this 8889 and 11,111. We will not do that. Instead of this, we will calculate as per the standard a rights adjustment factor. Yes, you heard me right. We will calculate rights adjustment factor. This rights adjustment factor is something in this way. We will say here pre-rights fair value per share, which I will divide by post-rights fair value per share. In our example, before the rights, the share was trading at 100. And after the rights, we are saying post-rights will be 90. So I'll divide this by 90. So, 100 divided by 90. That gives us 1.1111. So I get this, what we refer as the rights adjustment factor. So don't do these two calculations. Instead, find out the right adjustment factor. Now just see how we will consider it as per the standard. Okay. As per the standard, we will now do something like this. Try to compare it with the earlier calculation that we had done. We again introduce 1st April 2019. Yes, we again say at the beginning. Now we know at the beginning there were 1 lakh shares. The standard says that the shares at the beginning should be multiplied by the rights adjustment factor. So 1 lakh I will multiply with the rights adjustment factor, which in our case is 1.1111. So I say 1 lakh into 1.1111, I get 1,11,111. And of course the time weight is 12 by 12. Okay. Here explicitly we were calculating this number of shares. This time it gets adjusted with the rights adjustment factor itself. And I am getting 1,11,111 shares. Next, the date of allotment, 1st June 2019. We will say here, rights for cash. How many rights shares were issued for cash? How will I get this figure? Have a look at it, the way we are going to get it. Just see the calculation that you will have to do in brackets. Okay, what were the total number of rights that you issued? The total number of rights that you have issued is 20,000, right? 20,000 rights were issued. So I take 20,000. From this minus, you will have to take this figure, 1,11,111, and this I will further deduct 1 lakh over here. What I am doing is I am taking the shares after the rights adjustment factor, and from that I am deducting how many shares were there before the adjustment for the rights, which we know is 1 lakh. If you will closely look over here, this is actually turning out to be 20,000. And the moment from this I'll deduct 1 lakh, I will get 11,111. Isn't it? So 20,000 minus 11,111 will turn out to be 889, which I will consider from the date of allotment, and I'll get a time weight of 10 by 12. As you can see, you are getting exactly what you had done earlier. This was following the logical approach, and this is following the approach given in the standard. Work out the rights adjustment factor and then carry out the adjustment for the rights. Remember, this rights adjustment factor means you are including the bonus element of rights. And this is nothing but the shares issued for full consideration. So when you solve questions based on rights, this is the treatment that you are supposed to give. You have to do it on the basis of the rights adjustment factor. The only reason why I have considered it in a logical way is because if I don't show you this, and I tell you that you multiply with rights adjustment factor, automatically the bonus element is taken care of and then deducted in the next step on the date of allotment, you will get the right shares for full consideration. It will never become clear. So I have explained it in a logical way so that the shortcut can be understood in a better manner. This is how I am going to consider the right shares when I determine my basic EPS.
Press the bell icon on the YouTube app and never miss another update.